Today, Bitcoin reclaims the $122,000 mark as the crypto market steadies. And Congressman Brian Stile of Wisconsin discusses what the government shutdown means for Congress's goal of passing new crypto regulation by year-end. Welcome to CNBC's Crypto World. I'm Jordan Smith. Digital currencies are mixed as the market looks to stem the losses from yesterday's pullback. By noon Eastern, Bitcoin rose back above the $122,000 level, while Ether slipped below $4,500. Meanwhile, XRP also in the red, dipping to $2.87. Today's moves come as Wall Street gets a boost, and the S&P 500 and the tech-heavy Nasdaq both moving higher alongside a rise in Nvidia. Investors are looking past the lingering government shutdown, and the AI trade continues to drive markets higher. All right, let's talk more about that shutdown and what it means for pending legislation for our main story. Lawmakers set a goal to get crypto market regulation to President Trump's desk by the end of 2025. So I spoke with Congressman Brian Stile, a Republican from Wisconsin and chair of the Digital Assets Subcommittee, about whether the funding stalemate could put that goal at risk. Congressman Brian Stile of Wisconsin, thank you so much for being here. We're in day 8 of this government shutdown, and my colleagues across CNBC are covering the impacts to the economy and the progress toward reopening the government and much more. But I do want to focus this conversation specifically on what it means for crypto regulation, because lawmakers were looking to move forward with this market structure bill by the end of this year. I know it's in the hands of your colleagues in the Senate right now, but I'm curious how you see that progress going in this moment and whether the government shutdown is putting that goal of getting this done by the end of the year at risk.
Government shutdowns are unproductive. I voted to keep the government open, and hopefully the Senate moves quickly to reopen the federal government. How does it impact, in particular, crypto amongst all the challenges that we face? I think we still have an opportunity to get clarity across the line by the end of the year, although the focus and attention is making sure that we get the government back open. There's a lot of ongoing conversations as well about clarity and market structure on the Senate side. I'm actually continuing in conversations with some of my Senate colleagues on that topic throughout the week this week. And so I'm hopeful that as we come on the other side of the shutdown, that we have an opportunity to hit the ground running and have the Senate move forward quickly. I think the opportunity there is to build on the success that we had in the House legislation. And if the Senate chooses to use the House text as their base text, I think what we have is an opportunity to get this bill still done, signed into law by the end of the year.
Yeah, that's where I was going next with this. I mean, the Senate, as you mentioned, is looking to maybe update or potentially looking to craft their own version of market structure legislation. That's something that we talked about while we were in Wyoming with you at the blockchain symposium. But now that we're further along into this, and more importantly, if we do see changes to this legislation and it has to come back to the House, do you think it still has enough support to get across the finish line with your colleagues in the House?
Well, the Senate's going to work its will. My recommendation for my Senate colleagues is to really utilize the House bill as the base text. What I mean by that is there's a lot of really important policy debates in drafting this novel legislation. And in that debate, what we found in the House was landing pads and some of the more difficult challenges, making sure that we protect DeFi, for example, but we address some of the concerns of some of our colleagues to make sure that there's appropriate safeguards in place. I think what we saw in the legislative text that came out of the House under the great leadership of French Hill and G.T. Thompson in particular was the landing pad where we found the art of the possible. The Senate now is engaging in this process that the House spent over 5 years working on. I think what they will see is time and again, the landing pad that was in the House bill is the logical landing pad that can be reached. And so the Senate will work its will, but I think we have an opportunity for a quicker resolution to the end goal of getting this signed into law if we build upon the work that the House has done. And again, the House has been more than 5 years in progress diving into digital assets, where in many ways the Senate is catching up to the work that the House has already done.
Forgive me for wishing us ahead to another election season, but the midterms are approaching faster than I think a lot of us realize. Do you see that changing the calculus for some lawmakers on whether they support this type of legislation? I mean, crypto was a huge player in the 2024 election from a fundraising standpoint. So does that have any impact on some of these future-facing goals that you have?
Yeah, one of the most frustrating things about Washington, D.C. is how it gets harder and harder to get legislation all the way across the line as you approach an election. And so this year, where we're still a full year out from the election, is the best time to move. It's an easier time to reach compromises on essential aspects of the legislative text. And I'm of the view that every day that goes by is a missed opportunity because it does get harder to get things across the line as you get to the next election. The other is time is of the essence after, in my opinion, 4 horrific years of Gary Gensler at the helm. This is our opportunity to provide appropriate consumer protections, but also to make sure that we're unleashing capital, both human capital and financial capital in the United States of America. And so not only is it harder to get the legislation passed as we look out to next year, there's also a missed opportunity where I think we will see a real unleashing of investment here in the United States of America the moment this law is signed into law.
If I can go backward a little bit, we've talked a lot about the Genius Act since its passage, but it seems like there's still some room for debate on that law. One of the things is staking, because the Genius Act does prohibit issuers from offering interest, but platforms like Coinbase offer rewards to their customers. This has sort of become a sticking point for banks, which say that the crypto industry shouldn't be allowed to offer these rewards. The industry is still pushing ahead with plans to do just that. Do you think that Congress needs to step in here and clarify this, or is this something that's more of a SEC or CFTC issue?
I think the bill actually makes the appropriate clarification that interest can't be paid on these accounts. And so I think what we should be doing is now allowing the market to work its will. And what we're seeing is the success of Genius. Tether launched USA Tether inside the United States. That is really the crux of why that legislation was so important. Again, Genius provided substantive consumer protections, puts in place a regulatory framework for U.S. dollar-backed payment stablecoins. I think what we're going to see is a continued growth in that market in the United States. I don't think we need to go back and rewrite the text. I know there's lots of people that have opinions that they think they could slide it into the Senate legislation. But I would like to see the Senate focus in on true market structure and allow us to move forward with that rather than tie us back down in a debate looking backwards at the underlying legislative text of Genius.
There's one more issue I want to ask you about as you sit on the House Financial Services Committee and the Subcommittee on Capital Markets. We're seeing this wave of digital asset treasury companies come to market. These companies are meant to be a vehicle to invest in crypto through investing in the companies as they accumulate crypto. The creators say that these DATs are a good alternative to investing in crypto, but some scrutiny is starting to arise that these companies might be vulnerable to volatility. And additionally, the Wall Street Journal has reported that the SEC and FINRA are looking into some potentially suspicious stock trades. Is this something that you and your colleagues are looking at? Do you feel like you need to weigh in, or is this more of an SEC issue?
I think the first round is the SEC. I think that's the appropriate location for oversight and regulation in the space. Then we're the backstop to that in Congress. If the SEC, for whatever reason, isn't doing its job, we should be there. But also, if their findings are significant and we know or we determine we need to add additional legislation in place, open to discussing that as well. But I think the really good news is the SEC is no longer in a regime of driving forward policy by enforcement actions, but rather have an opportunity to instead to turn the tide and to turn to its traditional role, which is to enforce the law and use enforcement actions to actually hold bad actors accountable. And so if the SEC determines someone broke the law or was acting in bad faith, that's an appropriate use of the Securities and Exchange Commission's power. But what we don't want to do, obviously, is return back to where Gary Gensler was utilizing his authority in a means to really stifle innovation and development. So I think that in large part, the SEC has the tools and the ability to regulate this space. And I'm optimistic that we can control bad actors through the legislation that's already on the books, but also make sure that Congress, that we continue to provide the oversight of the SEC to make sure that it's doing its job correctly.
All right, that's all for Crypto World